Welcome to this explainer, everyone. Today, we're diving right into the absolute foundation of accounting. We are going to break down exactly how businesses capture and record their daily transactions from day one. To do this, we're focusing heavily on the very start of the accounting cycle. It's that critical moment where raw, real-world data gets recorded into what's known as the first book of accounts, the journal. Here's our quick roadmap for today's explainer. We'll start with the accounting cycle, then hit the rulebook of debit versus credit, go over the vocabulary of entries, and finally, look at the journal blueprint itself. So, Section 1, the accounting cycle. Where do we actually begin with all of this? Think of the accounting cycle as the literal heartbeat of a business. It always kicks off with step 1, the raw business transactions themselves. But honestly, those events mean absolutely nothing until step 2, which is recording them in the journal. And that's our laser focus for today. Now, once recorded, that data flows into the ledger, becomes a trial balance, and eventually ends up in your final accounts. But here's the thing. This entire engine completely stalls out without step 2. The journal is where reality is first translated into the language of accounting. Moving right along to Section 2, the rulebook. We're talking debit versus credit, the absolute universal laws of accounting. When we talk about how accounting cycles record transactions, everything revolves around two simple terms: debit and credit. Just think of your own hands for a second to anchor this spatially. The left-hand side of an account is always the debit, and the right-hand side is always the credit. Left is debit, right is credit. It really is that simple to start. But here is the million-dollar question we have to solve next. How do these left and right sides actually react when our business values change? I mean, if we buy something or sell something, how do we know for sure whether to use the left hand or the right hand? Okay, so this is the core rulebook for recording transactions. We're looking at two main families of accounts. First up, assets and expenses. When these go up, you record a debit on the left. When they go down, you record a credit on the right. But check out that second row. Income and liabilities behave the exact opposite. For them, increases are credits and decreases are debits. Mastering this sort of seesaw effect is exactly how the accounting cycle stays in perfect balance. Let's put this into a really practical example. Cash is an asset, right? So applying our rule, when cash comes into the business, that's an increase in an asset, you record a debit on the left. Conversely, when cash goes out, a decrease, that's recorded as a credit. Honestly, just understanding cash movement gives you a massive head start. All right, Section 3, the vocabulary of entries. Let's learn how to speak the actual language of the journal. You'll hear this all the time. Make a journal entry. It just means applying our debit and credit rules to record a single business transaction into the journal book. And here is a vital, non-negotiable detail. This is done strictly in chronological order. The journal is literally a date-wise diary of the business's financial life. Now, sometimes the real world is a little messy, resulting in what we call a compound entry. This happens when a single transaction impacts multiple things at the exact same time. Like, let's say you bought a piece of machinery, but you paid half in cash and took out a loan for the other half. Because more than two accounts are moving, you'll have an entry where more than one account is debited or more than one is credited. But don't sweat it, the total debits will always perfectly equal the total credits. And finally, every single entry needs a narration. Numbers and account names are great, but let's be real, a month later, you might look back at the books and think, wait, what was this actually for? The narration is basically a tiny, brief explanation written directly underneath the entry. Think of it as a short story reminding you of exactly what happened in plain English. And that brings us to Section 4, the journal blueprint. Let's look at how we build the physical record. So, this is the standard 5-column format. It's where every single business transaction materializes into a tangible record. And whether you're using an old-school physical notebook or the latest modern software, this underlying structure right here is the fundamental framework that captures financial reality. Let's break down these columns. In the first three, we're capturing the timeline and the context. The date column ensures our chronological order. Again, it's our financial diary. The particulars column is usually the widest. This is where you write the names of the accounts being debited and credited, and right below them, you drop in your narration. Then we have the LF or ledger folio column. Think of this as a cross-reference tool. It points to the specific page number in the ledger, which is step 3 of our cycle, where this information will eventually live. A quick tip, though, when you're just studying or practicing these entries, that column is usually just left blank. The final 2 columns, those are purely for the math. This is where you carefully input the monetary values according to those left side and right side rules we just went over. The debit amount column captures the value of the accounts increasing or decreasing on the left, and the credit amount column captures the values for the right. And remember, the golden rule: for every single entry, the number in the debit column absolutely must match the number in the credit column. Total balance every single time. It's non-negotiable. To wrap up this explainer, I want to leave you with a quick challenge to chew on. If you bought brand new equipment for your business using cash today, how exactly would you record that real-world purchase in this 5-column blueprint? Think about what's increasing, what's decreasing, and where they belong on the seesaw. Mastering this one simple action is the key to unlocking the entire accounting cycle. Sketch it out right now, because getting this first step right is what ultimately dictates your business's true bottom line. Thanks so much for joining me.